way the government finances are set up, we continue to spend more than we bring in tax revenue, and therefore the debt is growing, and therefore as interest rates go up, the interest costs are growing. And it's, as James Lavish has so well pointed out in all his work, we're in a debt death doom loop where higher interest rates require bigger deficits, which mean you got to sell more debt. Selling the same amount of more debt into the same amount of demand means higher interest rates, and winch, rush, repeat, right? I mean, it's a vicious negative feedback loop, and I think we're getting to the point where the can kicking is going to get very, very hard.
For so long, governments have grappled with the issue of monetary inflation. Even the gold standard couldn't solve the problem, as the supply of gold grew at a slow rate of 1.7% per year, leading to inflation. However, the invention of Bitcoin has revolutionized the concept of money, providing a solution to this ancient problem. At first, people were skeptical about Bitcoin, just as they were when the internet was introduced. But as more people understood and used it, it became mainstream. Similarly, Bitcoin is gaining widespread acceptance despite initial resistance. Its adoption is similar to that of cell phones, which were once expensive and clunky, but are now ubiquitous. As Bitcoin grows, it attracts institutional investors and Wall Street, who recognize its potential. While some critics remain, visionaries like Fidelity's Abby Johnson have embraced it, understanding its potential to improve the world and make a profit. Bitcoin is changing the world, bringing sound money, and fixing the broken financial system. In a recent interview with podcaster Sean Clarke, Lawrence Lepard, also known as Larry, talks about his observations about the impending financial disaster and the risky debt cycle the US dollar faces. Larry also discusses what the Federal Reserve might do next in light of the pressure on them and how Bitcoin can protect our financial future. If you want to know how money will work in the future and how Bitcoin may free us, stay tuned. As we bring you clips from their recent interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
The money is broken, as we were talking about before the show, and that's been a long process. It started with the creation of fractional reserve banking, the Federal Reserve. It continued throughout the 20th century and culminated in the gold standard being abandoned by Nixon in '71. And it's just kind of gotten cumulatively worse and worse and worse. And now I think we're really in the point where it's becoming more apparent to everybody, and events are accelerating. So it's more important than ever if you're trying to save money, save it in things that the government can't print. And
Yeah.
Bitcoin is probably the best choice. And gold and silver are not bad choices behind Bitcoin. I think Stein's law applies, which says that if something cannot go on forever, it'll end. I mean, the math is against them. They can't grow debt at a rate in excess of the rate of growth of GDP without eventually having the interest cost on the debt, create a crisis. And but you're right. I mean, it's gone on longer than it should have, and it could go on for another 5 or 10 years. Some people think longer. I kind of don't. I think we're going to come to a head here, in the next 5 or 10 years. But I also thought that it was going to be conclusive in 2008, and they managed to kick the can there. They've now taken it up to the sovereign currency level. I mean, we had a dot-com bubble, we had a housing bubble. Now we've got a sovereign currency bubble. And the way the government finances are set up, we continue to spend more than we bring in tax revenue, and therefore the debt is growing, and therefore as interest rates go up, the interest costs are growing. And it's, as James Lavish has so well pointed out in all his work, we're in a debt death doom loop where higher interest rates require bigger deficits, which mean you got to sell more debt. Selling the same amount of more debt into the same amount of demand means higher interest rates, and winch, rush, repeat, right? I mean, it's a vicious negative feedback loop. And I think we're getting to the point where the can kicking is going to get very, very hard. I mean, right now we're in an interim period where we had a lot of money printed in the COVID example. They've managed to kind of slow that down somewhat and tighten up a little bit by reducing the Fed balance sheet from 9 to 7 trillion I'm talking about. But, eventually something else is going to break, and the system will not have enough money in it to function. And they'll be faced with a choice that they're always faced with, which is, print money to keep the system going, knowing that the risk of that is inflation, or don't print money and let everything collapse, knowing that looks something like 1929. And we know what they're going to choose because we've seen them choose it for 100 years. I mean, they chose it in Silicon Valley Bank. They chose it in 2008. They chose it with COVID. They chose it with LTCM way back in 1998. I mean, I've seen all of these in my career, and they just keep choosing the same thing. And and the excuse they'll use is the one they used in '08. I mean, Henry Paulson went to Nancy Pelosi, got on his knees, and said, "Look, if you don't give us this $700 billion for TARP, the ATMs aren't going to work tomorrow, right?" And
Yeah.
they kind of have a gun to your head, and they threaten, the Armageddon of the financial system unless you print. And guess what? The politicians put into that condition, put in those circumstances, they will print. So we know they will print, and I think in the next print, the Fed balance sheet goes to 20 trillion. And the thing that's important here, Sean, is that with each of these events, more and more people are coming to see it. I mean, a lot of people saw it in
Yeah.
'71, and there was a big run in gold then, and a lot of the hard money people got it, but they managed to contain that by you know raising interest rates very high, and they could do that because sovereign debt was a small percentage of total GDP. But since then they've let things go in the other direction, and it just keeps getting cumulatively bigger. So to timing, I think we're going to see fireworks in the next 5 years, and I personally can't see how this system holds together more than 10 years. So I mean, I think we're on a sound money standard, or we have hyper Bitcoinization, sometime between now and 2034.
It has taken a long time for the financial system to collapse. The Federal Reserve's establishment and the gold standard's removal in 1971 were its foundations. With debt increasing more quickly than economic growth since then, the situation has only become worse. This has created a vicious cycle in which longer-term debt must be sold to fund larger deficits, which raises interest rates even further. The inevitability of our debt-death cycle makes it more difficult to put it off. Requiring additional money printing to maintain the status quo puts the government in a vicious cycle that could lead to inflation. In 2008 and during the COVID pandemic, they made this decision previously. More people are becoming aware of the situation's truth every time. Another trouble may rock the financial system, which could occur within the next 5 years. Let's watch more clips from Larry's interview and gain more insights into the causes of the debt cycle and the increasing adoption of Bitcoin.
For 2,000 years, we've had the problem of monetary inflation. I mean, the Romans had it, and every country and government since that time has had the problem, even to a degree when they were on the gold standard, because the supply of gold grows at 1.7% a year, which that means you compound that. That means the amount of gold that we hold in the world doubles every 40 years. Monetary inflation and monetary debasement is a problem that's existed for thousands and thousands of years. And that's why the invention of Bitcoin is such an amazingly significant technological innovation, because it takes this couple thousand-year-old problem. I don't know, when the internet was introduced, how did people wake up to that? I mean, there were those of us who were in it early, who knew what it was, who were excited about it, who realized it was going to change the world. But, at the time, my 70-year-old mother at the time was like, why the hell do I need this? And she wasn't going to get a modem and dial up and link into the internet. But, maybe 10 years later, when all her kids had it, we were emailing each other and she wasn't on the email list. She said, "Hey, set me up on this internet thing." I mean, it's word of mouth, and it's penetration and knowledge on the part of the populace, right? And so, I figure there are probably about 10% of us who kind of get it or are aware of it. Maybe it's even less than that, but let's generously say maybe 10% of the developed world is kind of involved in this whole trade and in this area. And so, we're going to get to 90%. And, if you use the Gladwell theory of the tipping point, it took us 15 years to get here, in another 15 years, we'll be at 90%. And I saw this with cell phones. I mean, the first cell phones came out, they were clunky. It was 40 cents a minute. Only the richest of the rich had them, and they make 5-minute calls, but they really needed to make those calls, so they paid for them. Well, now we all have cell phones. Calls are almost free. The monthly charge is de minimis for somebody who's doing reasonably well. And this is how technology works, right? It starts off as being a little clunky and a little misunderstood, and people are resistant to it. I mean, a lot of people are like, it's magic internet money. When you get all the normal pushback, but over time, they come to see that, hey, hang on a second. Oh, gee, that thing you bought has gone up a lot, and the thing doesn't. This is an asset. This is something that if I buy, I can get a good return on it. And we're encountering some of that right now. The thing we're having to overcome is that a lot of people are looking at it and say, okay, I get it. I like the thesis. You're probably even right. But gosh, how can I pay 60,000 when you bought it so much cheaper? And
Yeah.
what I'm trying to convince them is that, well, it was like, how could I pay, 2,000 or 300 or 500, whatever I started buying it, when Max Kaiser bought it for two, you know,
Yeah.
right? And someday, your grandkids will be buying, the price of Bitcoin will be 2 million, $3 million a coin. And they'll be saying, hang on a second, you mean to tell me you were buying a whole Bitcoin for $60,000 in 2024? Oh my God, how did that happen? So, it's kind of a cumulative thing as it gets adopted. It arguably brings some negatives because I don't have a high regard for Wall Street and some of these people, but in general, it also brings a lot of positives. I mean, the ETFs, as an example, as Saylor has pointed out, I mean, this is an enormous positive step. I mean, one of the biggest complaints that I used to hear when I was introducing it to people was, well, yeah, that's too far outside the system. The government's going to shut it down. Well, when the SEC approved it, that kind of put a kibosh on that argument, right? I mean, now, there's not to say they won't in the future change their mind as they realize that it's ruining their system, but for now anyway, the ETFs have approved it, and then Wall Street has jumped on board because they can see that it is an attractive asset. It is going to perform well. They can get a fee on it in terms of managing an ETF, and so Wall Street's all about making money, and they recognize that it could be the future. And the more visionary ones, I mean, Fidelity's been at it for quite some time. Abby Johnson got it very early. She was probably the leading kind of Wall Street type or investment management type to pick up on it. But like I say, I don't have an enormously high regard for Larry Fink. I know what he did, what he is, and where he's been. But that's fine if he now gets it and understands that what it is and wants to support it. Well, that's all good. I mean, my view is anybody who wants to support this new invention, which I believe is going to change and improve the world, as well as go up a lot in price. But forgetting all of that, I really want to see the world get fixed because I
Yeah.
think the world is terribly broken as a result of the lack of sound money and living in the fiat system that we live in.
Meanwhile, net inflows to US spot Bitcoin ETFs surged to $143.1 million on Friday, demonstrating renewed investor confidence despite recent Bitcoin volatility. Fidelity's Wise Origin Bitcoin Fund led with $117.4 million. This shows Bitcoin's strength and why people see it as a good long-term investment, especially during tough economic times. When considering the broader economic context, Bitcoin's appeal becomes clearer. As governments continue to print money to manage debt cycles, leading to potential inflation, Bitcoin presents a decentralized alternative with a fixed supply. This characteristic positions Bitcoin as a hedge against inflation and currency devaluation, attracting investors seeking stability in an unpredictable financial landscape. The cyclical nature of debt and money printing, previously discussed, exacerbates concerns over fiat currency stability. In this environment, Bitcoin's limited supply and decentralized nature offer a refuge from the vulnerabilities of traditional financial systems. The recent ETF inflows signify a growing recognition of Bitcoin's potential to preserve value and provide financial security against the backdrop of ongoing economic challenges. What do you understand about the debt loop? And do you agree that Bitcoin is the solution? How bullish are you on Bitcoin? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.